Hello, hello, hello. Today is October the 29th. Trading and investing of any kind carries risk. Everything discussed here is for entertainment purposes only and not to be taken as financial advice because I don't give advice. All right, let's jump into this idea of where the market is, what my reasonings are, and all these things. So there's this thing that exists called the dark pool, and it's not as creepy, crazy as it sounds, but you know, the underlying purpose is really that if somebody like a hedge fund goes and places a share, an order for 5 million shares or a million shares, that it doesn't just pump the market up 20 points like a flash pump or a flash crash. So anything beyond that, feel free to go read about them. I mean, they're not it's not something I'm going to talk in depth about, but what I'm going to talk about now is how I utilize that information to kind of look for directional moves. So currently, or just, I mean, you have to look historically at these things too and how they work. So how I use dark pools are typically, I will track historically kind of where the shares came in, how many shares, what the average prices were, what the ranges were. But at a high level, this is kind of what I look at. So if you look here, the first week of October from the 4th to the 7th, this is kind of what it looked like. This is how many shares came in. This is, total amount of shares. And this is right at the peak of this push, right? So then come back over here, you look at this, and we'll call it a pullback, I guess. But you look at that and you look at the number of shares, they're similar, right? So, potentially there was some selling going on here, some covering here, and these are all theories, right? I don't know if this actually happened or not. So all I can do is, kind of use the information to try to figure out for me where I should be keeping an eye out. So whenever I formulate a bias on a directional move, the next thing I do is I remove that bias from my brain and I go look for all the things that are the opposite, that could take it in the other direction and see if they're just as clear. And so that's typically how I try to figure out which way it's going to go. And then from there, I don't have a bias anymore. Typically, I just play what I see with all that information in mind. So, when I say I don't have a bias, I do, but it's very easy for me to remove that bias, right? So the idea, and I had somebody ask me this question in a comment about the whole idea of, a splash effect. So the idea of a splash effect, when these dark pool prints come in, what you will get is a move exactly like this, right? It's this, which, I mean, it legitimately, literally, however you want to say it, looks like a bit of a splash. So the idea here is, if you were to measure this, so let's say the initial splash or the initial prints from the splash, I think they were right around 384.90 or 89. I can't remember the exact number. But if you were to take and measure this from the peak and you were to bring it all the way down here to the bottom, right here, what you would get is this center line right here. So that is where a majority of the first prints came in when we got up into this level. So what happened? Well, we had this pullback, and then we basically had almost an equal push, right? And it's the idea that, it's part of why dark pools exist. I mean, think about what that would have been because that was 10 million shares roughly, that just came in as 250,000, 400,000 as just prints on dark pools because they have to report them. So the way to think about this is that you and I and most people that trade, we're like little fish. And if we jump out of the water and we land back in the water and there are people standing on shore, they're not going to see anything. They're not even probably going to know that we jumped out of the water. But if you're a whale, I live in the Northwest, and I can guarantee you, I have video and pictures of this. If a whale jumps out of the water, I don't care if you're half a mile away. not only are you going to see the whale, you're also going to see the splash. And if you're anywhere in the vicinity of where that whale landed in the water, you're going to see the wave that whale creates. Like it's big. So what the whole idea, the way that I picture it in my mind is these dark pools, they keep that to a minimal splash as opposed to a big wave. And so it's the idea, instead of being right next to the whale and having it actually sink your boat, because it could legitimately sink your boat if it were to pump the market up or down. The idea here is that, at least again, this is how I see it in my mind, is that now we're just standing on a rock on the shore. We're looking from afar and we just kind of see the ripples come in at the end, right? And that's kind of the way that I picture a lot of this. So that's kind of what the idea of a splash effect is, at least the way that I put it in my mind. So, but how I utilize these dark pools is I will go look and kind of see. So here, this is the latest push that we had, right? We had this push and this push all the way up here. So what we had here, we had almost 50 million shares that came in. And here we had another 50 million prints come in. Well, the thing about these prints is you don't know if they were buying or selling. You just kind of have to guess, okay? So there's 50 million here and 50 million here, right? So the way that I would look at this is probably or possibly a bunch of selling happened and a bunch of covers happened here. So when you cover, you're having to basically buy. So now I don't remember exactly what happened for this rip here. I do remember something going on, but anyway, so what started to happen, instead of having another rip down in the market, what we ended up having is we kind of had more consolidation here. So what that tells me is that, over this week, we had a week of consolidation with roughly 76, almost 77 million prints. Then we moved up. Well, the crazy thing is we get to the top up here and what do we see? We see 76 million prints again. So what does that tell me? Well, it tells me one of a few things. We could have had buying for 49 million here. This push up, maybe we sold 49 million, and as we went back down, we bought another however many million that is, and we're going to do the same here, right? We're going to sell a portion of it, and then we're just going to keep pushing up. That's a possibility. Or there was a bunch of accumulation here, right? The supply zone, we pushed up. Sorry, the demand zone, and we've pushed up, and now we're in the supply zone. They're supplying. And you notice we hit these peaks, right? We started hitting these peaks and very possibly could have just been sold into. So what does that mean? If that's the case, well, I would expect a pullback. Well, if you expect a pullback, where's that pullback going to go? Well, you have to look at what's being set up out here. Potential pattern here, potential cipher here, or as we said, maybe there's just, half of this was buying or half of this was buying, then we sold at the top and we kind of just, we're just pushing it up that way. We don't know. We just have to play what we see as it comes in. As a day trader, that's what I do. I do swing trade sometimes, but, I would ultimately, the way that I see this going is I see, now that I've really looked at this a lot more, my idea here would still be that we push through the November midterms. I don't really think they're going to yank the market on us through the midterms, because, that just wouldn't be good for anybody. And, if you know how politics works and you halfway understand it and you understand that there's market makers and, there's just overall, not even going to get into that. It's just how things work. You just either grab on the coattails and you ride along, or you try to fight it and you get run over by the train. It's just how it works. So what the idea in my head here is that this was probably or possibly supply, right? And now that we finish that supply, we'll very likely, at least not likely, we'll very possibly get a pullback here. We'll hit this trend line and we'll either, snap through that trend line or we'll stop in this area. But, just looking at the time that it's taken for making some of these other moves, that's kind of what I'm taking into account too. how many days are we going to pull back before we see more accumulation? And then when we see that accumulation, when's it over? Well, we don't know that, right? That's the whole idea of, we don't have trillions of dollars to put into dark pools. So this is how I utilize dark pools. They don't give you, everything in trading is an idea. It's just an idea, and from there, we have to trade and we have to play what we see, which is why we look at patterns. We look at, the probability of things working out based on the patterns. And then we look at candlesticks. We kind of look at what these candlesticks are telling us versus the volume, and then other indicators, MACDs. What's the point of control? And there's so many things that you can look at. And that is why we utilize these things, because we can get an overall sense of what's going on. But just because we think we're going to go up, the market doesn't always just go straight up, right? It goes in waves. And so, the way that I'm looking at this now that I've, taken the time to actually go back through all my data, I'm going to be looking for a pullback. Now, again, as I've said previously, it doesn't mean that Monday morning I go look at footprints and I go look at all these other things and it's like, oh, okay, well, we're just going to continue. Because if this pattern here, this cipher pattern that I've got drawn out here, we can pop to 394 roughly and it still works, right? So we could have a push and then a pull, or we could just keep going, right? Anything could happen. But the logical pieces of this and the probability is where we start to, in our own minds, this is where we start to formulate a bias. So the idea for me, what I am personally going to look for is, Monday, I would like to see some volatility. And in that volatility, I would actually like to see a pullback. If nothing else, I'd like to see a pullback to this trend line. And then at worst, we'll see us come down here to complete this from the bottom to here, this roughly 50% retrace for this pattern to work itself out. Or we pop to 394, right? And if we pop to roughly 394, that's going to be a little bit less here. But we still, and it's going to be a bit less here if that works out too. So, and then to maybe pull down to 370 or in that area at worst. So, and then we'll turn around and we'll continue to see a move up. At least that's the way that I'm going to approach it in my mind. But like I said, on Monday morning, if I see something maybe not working out in that way, well, I'm just going to change my bias and I'm going to trade what I see. So I don't know if that helps, but this is how I utilize them. Now, I have a ton more data that I look at for dark pools. There's a lot of things that I do that I'm not just going to put out on the internet necessarily. But I hope this gives you an idea of how to pull the data together and understand it and start using it, to kind of look for what might be happening. Then combine those patterns. Then start looking at candlesticks. Look at the volume that's coming. Just look at all of these things together. Draw them all out. Get an idea. If it happens to pull, where's it going to go? Be prepared for that. If it happens to push, where's it going to go? Be prepared for that. Because when these patterns complete, they pull back, right? When the patterns complete on the downside, they push, right? Or pull back, I guess you could call it as well. But so there you go. I hope that's helpful. This is kind of what I'm looking for. And again, if it doesn't work out, then I'm just going to play it as I see it. So hope everybody's having a great weekend. I just wanted to throw this out there because I had somebody ask about it. So I will see everybody hopefully on Monday.